Welcome to Charts This Week. My name's David Linton. I run Updata, and this week's edition for Monday, the 11th of April, comes to you from London. And we start, as always, by looking at crude. Remember, these prices come from your Thomson Reuters icon screen, so Updata adds that additional level of analytics, all sitting on top of the Thomson Reuters icon data. So we start by looking at Brent crude. Crude had a very strong finish to the week last week, and we have gone on to just test this 42 level again. So that's really quite key for Brent, and we are just testing that at the moment. So really encouraging that Brent is recovering. It did look a little bit worrying there. We got through on the cloud. We see the correlation with the US dollar is negative. That's what we expect. Dollar goes up, Brent goes down. We are seeing the dollar falling back at the moment, which we'll look at shortly. So we're seeing some Brent strength there, and the correlation is kicking in. We are through the cloud here, so we are in a now in a sort of bullish phase, but we can see last year that it was pretty short-lived. It only went on for a few years and a few months, and then we embarked on the downtrend for the rest of the year. So the second half of the year normally is the bad half of the year, and that shows up in the seasonality charts. And we see here, we just drag sideways, that we are entering territory where the seasonality runs out soon. So this is the strong time of year for Brent. This is when, or for crude, and this is when we would expect it to go up. But now we're seeing it rolling over. This is where we might start to see a fall off. So we do need to recognise as time goes on, we are heading into territory where the price comes under pressure on seasonality grounds. If we look at the 60-minute chart, we see here the move down and then the strong move up. We nearly just got to that 42.50 level. So at the moment we're bullish above the cloud, and the support level there is around $40.50. So that's what we need to maintain at the moment. Shift T will put all the trends and targets on your chart. Interestingly, we didn't really get a target here. Sometimes in this bottom right hand corner, if you change the box size, you'll get clearer targets. 44, 40, 45, 50. So we do have upside targets. That downside target given and met, so that's quite interesting as well. Keep an eye on the targets. And then if we take a look at WTI, picture is much the same on the daily charts, of course. Here we are on the 60-minute charts, Shift T again, and we do have an upside target of 45.35 there as well. If you're trading crude or watching it more closely, the 1-minute charts, Shift T will give you the trends and targets, and here we see we've got targets to 42.55 was given last week at 39.85, so we see the target given and almost met. 43.50, 42.80. So this 1-minute chart's the one to watch. And again, if you change the box size here, you'll get more sensitive targets there. So if you're trading crude short term or watching it short term, these charts are a must. Take a look at US Nat Gas. Nat Gas is, we see here, still very bearish long term, bearish in the medium term. We do have a period this time of year where nat gas does recover a little bit through into June, and then it falls away quite strongly. We've seen that in previous years. So at the moment there is support on the price on seasonality grounds, and if we look at the daily chart, we see we're just nudging this $2 level. So bearish below 185, bullish above 205, so there's a 20-cent range there to watch. If we look at the 60-minute chart, we see that range really playing out. There's a lot of noise here. Shift T, and we've got targets in either direction. Again, you can just change the box size. We've got 210. Notice how these upside targets were all given, multiple targets given and met, but now it's hard to see where the price goes next. We have to wait for the break. Of course, if you're trading Henry Hub short term, the 1-minute chart, Shift T on your system, 183. So that's the downside target that we're looking at the moment. So it does look like we'll go back to test the bottom of the range. If we take a look at European gas, these are all OTC prices, either from your Trayport screen or the Updata Energy feed. And of course, you can mix and match that data with your Thomson Reuters icon data, so you can run Updata on multiple feeds. And here we see the correlation of the NBP front month and crude, and that the crude price coming from Thomson Reuters Icon, and the NBP prices coming off your OTC data, either off Trayport real time or off the energy updater energy feed real time. And we see here how we are just nudging along the bottom, and the correlation is slightly negative, so crude having less of an impact but over the last few months than it has where it has been quite positive. So that meant that crude falling meant US gas prices falling, crude now recovering, gas prices not really recovering in Europe. So that's where we're seeing the correlation start to alter. Here we see the 60-minute chart. We're below the cloud here. This is bearish. Had a little bit of a recovery through March, but now in April we're bearish. Shift T will give you the trends and targets, and we can see here downside targets 25.30, 25, 25.65, so around another 1.5 pence per firm to fall there, so looking pretty bearish. And of course, if you're trading any of the gas contracts short term, the 1 minute chart, Shift T will give you the trends and targets 25, 23.35, 25.10, so we're seeing that playing out in the short term 1 minute charts as well. TTF making new lows as well. We see here now just actually breaking to new lows on the price, so that's very bearish. Been bearish on TTF now for several months on the daily chart, so that's really quite key. If we look at the 60-minute chart, we see here how we've had this big move down in early April, sideways, and then potential for a sort of descending triangle pattern here, so meaning another big move down potentially. Shift T, and we do have downside targets to 10.1, 11, 10.1, 10.86. So looks like we are going to test that 10 level. Will we get below 10? That's the thing to watch. NCG and Gazpool also very bearish. So European gas prices looking quite worrying. Power prices not falling as much. So we see here German power. This is the calendar contract base load. Again, real-time data from the brokers or from your Trayport screen. We are bearish below the cloud, have been for a couple of years, so there's never been a time really where we've been bullish on the price in the medium term, i.e. months out. But we do see when we get to the 60-minute chart that we do have periods of recovery. Quite a base building here, which is a bit encouraging. We're seeing some base building up above the cloud. We're back still above the cloud here. Shift T will give us the trends and targets, and we do have downside targets, but really these upside targets being given and met. So there is upside to around 23 euros. So that's the level to watch. At the moment, we've got as far as 23.15 there. And of course, if you're trading German power shorter term, the 1 minute chart is the chart to watch. Shift T will give you the trends and targets, and we can see it's a bit of a mixed picture. So we just need to be aware that it could go either way. Gas prices, of course, may well weigh on the price. We see here UK baseload below the cloud on the daily, below the cloud on the 60-minute. Interesting Nord Pool recovering here, the daily chart above on the quarterly contract, and if we look at the 60-minute chart, up 2.5% this morning Nord Pool. Shift T, and we see here no clear visible targets there, but power prices looking a lot better than gas, but we need to keep an eye on the whole energy mix. Taking a look at currencies, we see here how the dollar index in the long term we're in this really big range between 101 and the low 90s, 93 say. So we are back below the cloud on this chart, so that puts us in a bit of a bearish frame of mind, but of course we always have to take into account the pattern, and it's until we break below this 93 it would be hard to call the dollar in the long term as bearish. If we look here at the 60-minute chart, we see how we've been very bearish below the cloud. Still are. Shift T will give us the trends and targets. We're seeing targets to 92, 91.60, 91.90, and even as low as 90.10. So it is suggesting that there is downside there, and we may well break out of the range on the dollar. But remember that this pattern is a move into the price consolidation range. Normally we would expect to move out strong dollars, so just cautious on that at the moment. Here we see the euro back above the sort of 113 level, So that's quite key. We've still got to break this sort of 116, 115, 116 level to then start to really see a reversal in the euro. Again, for the last year, we've really been range bound between 105 and 115, really. So we are in a big range there. If you look at the 60-minute chart, we see here that we're just above the cloud, only just. We are in this real consolidation phase. Short term, sort of between 113.25 and 114.50. That's the range at the moment. Watch for a break from that range. And we see from the trends and targets that we tend to have 117, 118.70, 118.20, 116.20, that one yet not activated. But there are mostly targets to the upside, so it suggests a break out of that range to the upside. And of course, if you look at the 1 minute chart, Shift T will give us the trends and targets. You might have to go to a smaller box size, and we see here again mostly upside targets, so euro just looking a little bit better. As well. If we take a look at the other currencies, we look at sterling. Sterling back into the low 140s. It has recovered a little bit this morning, so we're just back up and through the cloud on the 60-minute chart. But we see here the range. We're very much in this low 140s range. Shift T, and we do have a downside target of 134.40 if we make new lows below the 140.10 level. So keep an eye on that. A lot of volatility in sterling, of course, with Brexit. If we look at the 60-minute chart here on euro sterling, we see how the euro is just weakening a little bit now. So we're through the cloud, suggesting euro weakness versus sterling after quite a good run in the price. Norwegian krona pulling back, so we're seeing that just pulling back as well, and the Swiss franc against the euro, and sterling against the Swiss franc. We see here now touching the low 130s. A lot of people asking me about sterling Swiss, and it does look like at the moment we've got upside targets to 194, but that's looking less and less likely on the cards. We are seeing levels right back to the sort of 116, 117 level. So the Swissy getting quite strong. We are seeing gold recovering, and that has an effect, of course, on the Swiss as well. So Swiss looking like it's going to be quite strong. Last of all, we take a look at stock markets. We start with the S&P 500 index. The S&P just struggling around this 2050 level. If you saw the report last week on the markets, really quite key here how we just are just here not managing to make a new high, and we need to really take out this 2110 level. 2050 on S&P is also quite important, and we're struggling to hold on to that. So at the moment we see that we are just not managing to make a new high, and of course if we come back and make a new low, that would be quite worrying for the market. We've been through on the lagging line. This has been quite a reliable signal in the past. We're back above the cloud at the moment, but if we come back through the cloud, we then would start to look to make lower lows. So the S&P just looking a little bit worrying after quite a long run of 4 years above the cloud there. So we need to just be aware of that. We were through on the daily, so that's quite positive, but the 60-minute now coming back to test, just S&P looking like it's running a bit out of steam. So either we're going to bounce off this cloud and run again, or we're going to just see a bit of a short-term sell-off. We still have these downside targets to 1485, around 1500 level. These downside targets hanging over us, but we do have a lot of support here as well with these tram lines. So it could be quite a tussle, quite a test. And of course, next month we're heading into May. The classic sell in May and go away. So we need to be very careful around that time, where markets might then suffer a further sell-off. And we see here, the interesting thing is that we did have a downside target on the 0.5% chart. That has come off with a move above. So that is a positive sign that that new upside target, upside thrust, has negated that downside target. So that is a piece of useful information. If we look at the short-term chart on the S&P 500, we do have upside targets still that are around 5%. 3 targets all pointing to 5% upside. About 2150, that's a cluster. When we see multiple thrusts pointing to that, it increases the likelihood that we're going to go there. But we do have this downside target of 1993 back below 2000 as well, so just keep an eye on that. Of course, if you're trading the S&P E-mini, or you're looking at the market short-term NASDAQ, take a look at the 1 minute charts. They give you brilliant short-term targets as well. If we take a look at NASDAQ, The Nasdaq has been looking more bullish than the S&P. We haven't actually gone below the cloud on the lagging line at all, so that's looking more positive. And we did make a lower low here as well, which is another factor. Bullish on the daily, bullish on the 60-minute. So we're seeing here that we are still holding on to that in the Nasdaq. We do have upside potential around 7%. No real serious downside targets on the Nasdaq, notice. We do have a downside target on the 0.5% chart of around 25%, but interestingly, we do have this upside target as well. So, and then we do have a downside target not yet activated. The one on the S&P 500 was activated, and around 3% upside. If we take a look at European markets, we'll start by looking at the FTSE. FTSE 100 has been looking pretty bearish below this cloud. We see here on the daily chart how there's real resistance here at this 6,200 level, just struggling to break through there. But we are above the cloud there on the daily, so that is quite encouraging. And on the short-term chart, downside targets much the same as the S&P, about 25% hanging over us. We do have a new upside target on the 0.5% chart of 14%, and if we look at the 60-minute chart for FTSE, we do have mostly upside targets: 6%, 3.5%, 3.2%. So that is quite encouraging. So maybe we are going to see a recovery in the FTSE. If we take a look at the DAX, DAX been very hard hit this year. Low on the weekly, still not above on the daily, so that's looking more bearish than FTSE, and still not above on the 60-minute chart. And multiple targets, but we actually have this downtrend, so we'd favour the downside on the DAX. That's still looking pretty worrying. Taking a look at Asia, we'll start with the Nikkei. The Nikkei is below the cloud here on the weekly, below on the daily, and below on the 60-minute. Quite worrying signs there as well. So keep an eye on that. The Nikkei look one of the most bearish looking markets there. If we take a look at China, China of course has been sort of creating global fears. The weekly chart is one of the most interesting charts for China at the moment. This is the weekly cloud. We are just wandering into this bearish territory on the weekly. We had a lot to do for China to keep climbing this wall, a recovery in the price, and just this move down, lower high, another move down to a lower low. China is looking pretty worrying, and that is probably the most worrying looking market for us, in that we've got massive downside here, 46%, 50% if we make new lows, then that target is activated. So we do have an upside target of 15%. The downtrend is firmly there, and a lot of resistance. So China, although it's looking a bit more encouraging in the short term, we're still not through on the daily cloud. This level here of around 31.55 on the Shanghai Composite is the level that we need to break to feel a bit more confident. So China is a little bit worrying. If you take a look at the Indian market, the Sensex, one of the better looking markets, still bearish on the weekly chart, just coming through on the daily, still a bit below on the 60-minute chart, and a new upside target of 22%, but not yet activated. And if we do go lower, then there's a downside target of around 8%, so we need to just watch that as well. Last of all, we take a look at the Australian market, and because it's very resource laden with iron ore and commodities, we're seeing here the Australian market just selling off, so that is quite worrying. We're on the weekly, we're bearish. On the daily, we just couldn't get above the cloud, that's bearish. On the 60-minute, that's also bearish. And downside 17%. And then if we take a last look, we see here just on the short-term targets, a lot of downside targets here, 6%, 2.5%, 3%. So Australia looking pretty bearish against most of the other markets. That's it for this week. Until next week, happy charting. See you then.